Hey there, and welcome to episode 2 of our Level Up Your Creator Business series. Today we'll be talking about what to do if you have multiple income streams as a creator. And here's how to make sure you're capturing every dollar, even if you never get a 1099. So, if you miss this, could get flagged by the IRS, or even worse, overpay in taxes. So come on in, join us for a round of golf, and let's get going. All right, let's get into it. Play TPC Boston today. I think it's the course I picked. Let's go. But yeah, like we were talking about at the start, the IRS expects you to report all the income you earn, not necessarily just what you get on 1099s. So if you've got stuff from other sources that's kind of smaller, or like if they're from out of the country and they don't understand the IRS reporting obligations, or they don't have to for whatever reason, doesn't mean you can just leave it off the taxes. That's underreporting there and could be an audit risk, so we don't want to have, we want to limit as much exposure there as possible. Oh my gosh, that was awful. Hook. Oh no. Hang on a sec. Let's see if we can still reach the screen. This might be a terrible idea. Yeah, it definitely is. Never mind. We're gonna go there. That is a safer play. Another possible issue, it doesn't happen as much, but if you're not tracking it, it definitely can, and that is over-reporting. So basically paying in more than you owe. Like, there are some times, and we've seen it with some clients of ours, where they will get like a 1099 from like the platform they're on, but then also maybe because that platform paid them through PayPal or something like that, they will also get something from PayPal. And if you don't understand that the difference there, that there's overlapping income, the IRS is going to expect you to pay in that because they don't know that it's overlapping income. So there's certain things you've got to do, oh my gosh, with these providers and with the IRS, if you kind of catch it at tax time, to be able to make sure you're paying taxes only on the actual amount that you owe. See, that keeping up with it throughout the year, kind of helps with making sure, you kind of know what's in and out, what you're spending, like especially if you got credit cards, kind of planning your expenses and making sure, you're keeping enough aside for taxes and for kind of your regular operating, for like any contractors or subscriptions or any tech you might need. Kind of making sure where you stand with all of that stuff. Also, where your true profit is, so that you can then kind of make sure you calculate the tax bill correctly. Keeping a tight financial ship also helps with, like, if you're looking for building credit with business credit or business loans or anything, if you want to jump into a larger project or something like that. It also makes things like tax prep a lot smoother, where at the end of the year you can just either give access to your accountant or print out the statements your accountant asked for, and they're already there and kind of ready to go, so that kind of helps reduce stress for everybody around kind of stressful time of year anyway. Boom, baby. But yeah, and then you obviously, if you've got multiple payouts, from YouTube, AdSense, Twitch, TikTok creator funds, you've got that revenue source coming into the bank. You've probably got sponsorships and brand deals. Maybe you've got some affiliate work that you do. Are you tracking all any sort of merch payouts or expenses there? Do you know how much is being spent there? Or do you do Patreon, or do you help other people through consulting by building out or helping people build out channels or doing education in that way? Or maybe you do licensing and music. Yeah, there's obviously so many different revenue sources. It can kind of make your head spin when you think about tracking all of that, or trying to even pull together all at the end of the year. Who knows if you got everything right. But that's where kind of keeping up with it throughout the year does certainly help reduce that stress and headache, like we said before. Nice. It'll be close. We'll take those. Like I mentioned earlier, there are a couple different versions of the 1099. We've got the 1099 NEC. So that's basically you're a contractor for a company, or you show up and do some work as the talent for a show or something like that. Any payments over $600, they're required by the IRS to give you a 1099 NEC. And then you've got the 1099K. Now that's something you'll get from something like PayPal or Stripe or anything that processes other people's financial data for you. And that is what they report to the IRS on, and then what they give you at the end of the year. And then there's also the 1099 miscellaneous, which they separated recently from the NEC, but that's to record any other sort of miscellaneous income. The most common thing we see with the miscellaneous is royalty payments. So if you have music royalties, for example, you should get that from whatever distribution platform pays you out. But like I said earlier, even if they don't send you a 1099, it's still taxable. We've seen where not a lot, but sometimes these platforms aren't that great about keeping up with all of their dotting all their I's, crossing all their T's sort of thing with their accounting and systems. So you may not get a form, or it may only be partially correct or what have you. So or maybe it's something they've netted down the fees, where they've taken out 20% for an agency fee or something, and you've got to report the full amount and then take out the agency fee as a deductible expense. So stuff like that is important to kind of keep track of. Let's see, can we make this putt? Save the par. There we go. some best practices for keeping up with tracking your income. Obviously, using a dedicated bank account for the business income, ideally like a dedicated business account. Making sure you're tracking, every payment, even small ones, or if, you get gifts or donations or things like that. We just need to make sure you're keeping up with that in some way, whether it's a Google Sheet or maybe you've got like a simple financial platform like QuickBooks set up. Either way, any way you're tracking that is good, and as long as you're doing it, that's going to give you a good head start on kind of this journey into the world of a business owner as a content creator. And then, as you're tracking that data, make sure you're checking against any sort of dashboards or reported payouts that the company or the provider is saying they paid you. Make sure it matches the bank, and just maybe you set a recurring task to check that every month after you get paid, just to make sure you can identify any possible issues before the end of the year, and then it kind of makes tax time a lot easier if you can sort those issues out well in advance at the end of the year before they report anything to the IRS. Oh yeah, that was a beauty. Stop. Alright, let's see if we can make this. Pulled up. Boom. Some tips and some common pitfalls or mistakes to watch out for is, don't rely solely on the summaries they show you that you get from like a download or what have you. Sometimes maybe the range on the data isn't right, or there's something where the data is not fully complete. You want to track what you're getting in through what you actually receive, and then if you've kind of got any concerns or questions about it, reach out to kind of your contact immediately about that, just so you can make sure nothing goes wonky with any sort of income reporting. Watch out, like I mentioned this earlier, but duplicate 1099s where like the income is reported by the brand as well as like the processor, so just to keep an eye on that. Track everything as you go, monthly preferred. You just don't want to be scrambling and you're in April and your accountant will thank you. And just to kind of keep on top of things and to kind of make sure you're getting everything that you're supposed to, within any sort of software or tracking system. Just make sure you're tagging it with the appropriate kind of category, like YouTube income or, Patreon revenue or Twitch payout or what have you, just to make sure, come end of the year that it's all kind of matching your expectations. And then it kind of helps you track growth too, right? So like you can look back on it year over year and kind of see, how much you've grown over time on these different platforms that you create on. Nice. think the wind's going to affect this one too much. Nice. But yeah, we'll wrap up playing the last few holes here. But yeah, if this helped or provided some value in any way, go ahead and just smash that like button or hit subscribe if you haven't already. And if you're feeling so bold, share which revenue source you'd like to see grow the most this year down in the comments. But yeah, and as of right now, the next idea or the next episode will be flipping to the other side of the P&L equation, expenses, and how to best keep on top of those, and then also finding the deductions that a lot of creators kind of in our experience miss. So stay tuned, like and subscribe for the next one. But yeah, we'll go ahead and wrap up these last few holes. Just chill out and relax as we wind down this round. Oh, so close. Wait a second. That's way too strong, man. Go ahead and drop the flop. Yeah, that'll work. We finish with a birdie. There we go. Awesome. Well, I will catch you in the next episode. Peace.